Welcome back to another video. Today we are going to be talking about Snapchat and whether or not it belongs in your portfolio. Snapchat just released their earnings on Thursday, February 4th, and let's take a look at some of the things that I think are important, such as their revenue, their adjusted EPS, and their DAUs. EPS stands for earnings per share, and DAU stands for daily active users. The more you know. Snap's fourth quarter had a blowout in revenue. They posted a $911 revenue versus $856.1 million. Their fourth quarter adjusted earnings per share, or EPS, was 9 cents per share versus the 7 cents per share that was expected. And last but not least, possibly their most important metric to judge Snapchat by is their daily active users. Because what is a business like Snapchat without users? They posted a DAU of 265 million users versus what the street had was 257.9 million. I mean, that's a lot of people using an app every single day. 265 million? I honestly can't tell if that's a lot or a little. And the last thing we're going to be looking at is you hitting the like button for YouTube's algorithm. Snapchat's daily active users grew 22%, which went to 265 million. And Snap's average revenue per user grew 33% to $3.44 per user. So basically, each individual user on Snapchat is worth $3.44. So if you're watching this video and you use Snapchat and you're like, I don't think I'm worth a whole lot. Well, to Snapchat, you are worth $3.44. Earnings from other major tech companies in the fourth quarter already pointed to strong overall internet use because of the pandemic, as well as a strong holiday shopping quarter and reduced uncertainty around the COVID pandemic made marketers more apt to spend because they knew that people weren't going out. Facebook's advertising revenue jumped 31%, which was $27 billion in the fourth quarter. And Google's ad revenue grew by 22%, putting it at $46 billion. And the stock has already doubled since its last earnings report in October. Aside from growing its advertiser base, Snap's key to growth moving forward will require continuous engagement from its core users. While Snap saw a surge in user engagement during the pandemic, maintaining that momentum once travel restrictions and places start opening up again could be a hurdle that Snap might not be prepared for. Snap has been investing heavily in new features, which include augmented reality filters, as well as new partnerships with publishers. As we look towards the future, we're excited to build on our investments in augmented reality, mapping, and content to drive our ongoing growth. Shares of Snap have risen 208% in the last 12 months and 17% since the beginning of 2021. Of the analysts currently covering Snap, the average price target is around $57.90. So the stock is pretty much where the analysts want it to be. The highest price target on Snap is $72.50, while the lowest price target on Snap is $15. 3 months ago, Snap had 25 buy ratings, 11 hold ratings, and 3 sell ratings. Whereas today, Snap has 22 buy ratings, 9 hold ratings, and 4 sell ratings. So nothing has really changed dramatically in the analyst community and how they view the stock. And some more good news is that the overall consensus on the stock is overweight. Overweight is a rating that means better value for money than other stocks. So in other words, it's a good thing. Now let's take a look at the chart real quick. So if we just quickly put in some support and resistance lines, we are going back until basically the beginning of October, so roughly around 4 months or so. You can see that because of these earnings, it has recently just broken out, which is obviously a great sign. But it finally broke out of the resistance. The RSI is a little high, but that is to be expected after a blowout earnings call. So I wouldn't be shocked if there was a small pullback, maybe back to the now support line, which was the resistance line. And the MACD lines are also crossing down here below, which is a good sign for it to break out. If you don't understand anything of what I just said about like RSI and the MACD stuff, basically the RSI stands for the relative strength index, and that means like how many people are buying versus how many people are selling, basically. And then the MACD sort of tracks momentum. I implore you to do your own research because at the end of the day, I'm not a financial advisor. I'm just looking at the charts the way that I know how to look at charts. So that's the recap on Snap and their fourth quarter earnings. The numbers that they had looked great. My only concern with Snap would be the fact that were these numbers in the fourth quarter too good? Now, granted, we don't know what the future will hold with 2021 and the pandemic and when life will open up again. And because we don't know when that's going to happen, we don't know if that will dramatically hurt Snap's business of people being indoors and being on their phones all day. So that's like a pretty big question moving forward. I don't know if it's enough to keep me from buying the stock. I currently do not have any exposure to Snap. Let me know in the comments below if you like Snap, if you're holding Snap. Are you thinking about buying Snap? Let me know, and I'll see you guys for the next video.